Welcome to Exploring Crypto, a YouTube channel dedicated to the pursuit of understanding crypto. My name's Harry, and today I'm here to provide you with a weekly roundup of the news, providing you with those crucial sound bites to make you sound a little bit more well-rounded. If you do like this content, please like the video, hit the subscribe button, turn the notification on. Let's try and grow this channel. Over the upcoming weeks, more and more content is going to be coming out, whether that be newsly roundups, details on particular coins, or just my thoughts on the overall market sentiment. You can also follow me on Twitter with the links down below, where I post my thoughts daily, retweeting important news articles, whilst also taking a light-hearted view on the market. Right, without any further ado, let's dive into the news. More bad news for Sam Bankman-Fried this week. Following on from his controversial decision to use a VPN to access the Super Bowl, leading to further restrictions in how he can now access the internet, Sam Bankman-Fried has been hit with additional bank fraud charges by the New York Southern District. On top of his previous 8 charges, he has now had 4 additional charges added to the counts. These include bank fraud and operating an unlicensed money transmitter, in addition to the 8 counts he already faced. He is also facing charges of a modified campaign finance law charge, conspiracy to make unlawful political contributions. 2023 has seen the United States governmental departments such as the SEC take a significantly negative stance towards cryptocurrencies following the fallout of the FTX collapse towards the end of 2022. This has also coincided with a significant amount of positive news coming out from the Far East, with China and Hong Kong all reporting very bullish news. Hong Kong has shown a clear desire to become the new crypto hub of the Asian continent and potentially even further afield. And with soft backing from Beijing, this is deemed a very positive step. The Hong Kong Monetary Authority confirmed this week that they are gearing up to regulate stablecoins and are also looking to reinitiate institutional investments in cryptocurrencies. Now, whilst there's a bit of confusion this week thinking that retail may also have access to this, that has since been confirmed not to be the case. Coins of which will be made available are unclear right now, although everyone is looking towards BTC and Ethereum. Off the back of all of this positive news, social media has been abuzz with rumors that it will actually be China who leads the next crypto bull run. With the injection of $92 billion worth of liquidity inserted into their economy on the 17th of February, we saw a significant amount of Chinese-related cryptocurrencies increase in value, some well over 200 to 300% in a single week. Since that time, price has drawn back. Cameron Winklevoss, co-founder of Gemini, took to his Twitter account to cite the following: "My working thesis at the moment is the next bull run is going to start in the East. It will be a humbling reminder that crypto is a global asset and that the West, really the United States, only ever had 2 options: embrace it or be left behind. It can't be stopped now. That we know." We've also seen positive news coming out of the EU, such as Ingenico confirming that they have teamed up with Binance to allow BTC and cryptocurrency payments in France. Germany's second largest bank, DZ Bank, will now offer BTC and other cryptocurrency assets to institutional investors. A worrying news event came out of the United States this week relating to NFTs. A federal judge ruled that the NBA Top Shot Moment NFT Securities lawsuit against Dapper Labs could continue, as the NFT itself satisfied the legal requirements to be considered a security. Whilst the judge went on to state that it only applied in this instance and further instances should be ruled on a case-by-case basis, it does set a worrying precedent for any future considerations. Considering the stance that the United States SEC is currently taking on cryptocurrencies, this could be worrying for all future NFT projects. The SEC confirmed they charged NBA Hall of Famer Paul Pierce for unlawfully touting and making misleading statements about crypto Ethereum Max. He was charged $1.4 million in penalties. Coincidentally, Kim Kardashian, Floyd Mayweather, and other celebrities filed a motion to dismiss a further crypto promotion lawsuit based on the Ethereum Max that was filed in December 2022. To be clear, in the case of Kim Kardashian, this is not to dismiss the original lawsuit that was brought against her, and she has settled the £1.2 million fine. And finally, Coinbase reported their fourth quarter earnings after the bell closed on Tuesday this week. The crypto exchange reported a $629 million revenue versus the $590 million expected. However, the company stated that only 8.3 million monthly transactions had been used during the quarter, which was down from 8.5 million in the previous period. It was not all good news, however, as year on year it had seen a significant drop-off in both revenue and usage, which is to be expected during a bear market that we experienced in 2022. Prior to the earning reports being released, the Coinbase stock dropped by 4.8% during that day. However, aftermarket trading saw the stock increase by 2% following the positive news that came out. I think in summary, we can say that whilst it wasn't great news, it wasn't as bad as expected. After a somewhat cryptic Twitter post, Coinbase unveiled its Ethereum Layer 2 network called Base. Coinbase said the Base network is designed to be a low-cost, open-source Layer 2 developer sandbox for dApp. However, just to confirm that you don't always have to be smart in crypto but rather lucky, interestingly, Base Protocol's token value jumped 250% on the news of Coinbase's Base announcement, despite no affiliation with the Coinbase project. In fact, Coinbase has confirmed that there will be no token associated with their Base. And now to take a look at the BTC chart. We can see that BTC actually started off relatively positive this week. However, after reaching a high of 25,230, we have seen the price be rejected from the 200 weekly moving average. And from then, we've seen 4 days of decline, currently seeing the price at around about 23,900. BTC now finds itself resting nicely on previous levels of support in and around the 23,600, established at the end of January, beginning of February. Should it lose that support, then there isn't really much support holding it up until around about $22,000. Bulls will be hoping that this would be a pivotal moment for it to turn around and continue the uptrend we've seen in 2023, with higher highs and higher lows forming. While the bears will be crossing their fingers hoping that the 22 level does actually fail, as there isn't much support from 22,000 to around about 19,000, giving people who missed the bottom a potential opportunity to get back into the market sub 20,000. Right, that's it for the Newsly Roundup this week. Hope you enjoyed it there, and I hope you garnered just a little bit more information about what has actually gone on in the markets. Again, if you did like this content, please hit the like button, please hit the subscribe and help us grow as a channel. Don't forget to follow me on Twitter down below. And if you have any suggestions about how I can improve this content going forward, please drop a comment in the comment section below. Until next week, have a great time and let's keep exploring crypto.